Hello, hello, good afternoon, good afternoon, good morning, good evening, depending where you are in the world. Uh, I am doing this update just, just to show you a trade, you know. What trading, you know, has to do um, has a lot to do with what traders think, you know, the market is going to do, and also what happens when, you know, when they think it's supposed to happen doesn't happen, and how inventory gets long and short really quick, really quick in the market. This trade has been developing. I mean, it has taken since and pretty much all day long to develop. It happens so fast. You know, in the morning I say I was super tired. I got just kind of like maybe like less than an hour of sleep today because I had to do some things. Um, and because I also, you know, realized I wasn't going to sleep that much anyway, I decided just to stay, you know, and trade the overnight. I don't trade the overnight and see what's happening in the overnight. And I placed a couple of trades there. It was quite active actually today. And what happened in the overnight, you have this market. This is a Nasdaq trying to close the gap. It couldn't close the gap. And now we have the ES here opening inside previous day range, getting out, and then getting outside the range, and then coming back, right? Coming back. These two periods establish a trend to the downside, and then we have another one, C, that goes to the upper side, which ends the downside trend. D also ends. So what happened here, sorry, is when these kind of things happen, the odds that we are going to have a rotation, you know, are really high there. You know, session one time framing increases the auto rotation. The first thing in the morning had this A period coming out, which was a sign of strength. It didn't materialize, you know. And up to this point, let me see if I can split this F after F, G. No. Okay, up to here, you know. If I split this, oh, okay, just check this out here. What do this looks to you? You know, it looks like a P shape here, but the thing is, we have this low has no excess here, and high no excess as well. So potential of a sequential trade here, you know, potential. It doesn't mean that's going to happen, just the potential. Now the next thing, I check Nasdaq. Nasdaq was clear, and I say yearly we were talking about how I think Nasdaq is leading the way. Nasdaq was trying to close the gap. But watch this trade, what the market trade trying to do, that was painful. I was doing some trades on the Dow, and well, I was constantly being stopped out all the time. All the time was stopped out. There's a lot of chop and rotation on the Dow now, and you can see. If I was observe this market, you can see that this market was trying hard to go higher. You know, market rally, comes back, rallies come back, rallies come back. You know, and POC was lower, was down here. No. So you have the potential of sequential trade. You also have the potential of a 45-degree line trade. The 45-degree line trade is the market tries to go in one direction, but it's always pulled back to what what is POC, right? At the moment, or at the end of the day, comes to be POC as well. And so you have two things there. Now, take the Nasdaq as well that tries to close the gap here. And something I noticed in Nasdaq, F here, it was bought just wrong. In this period, gives the market, the sign for the long here. It took a while for the ES. ES was G, actually the next period. Where G was? H. Once you see this, or maybe you don't even need to see this, right? Because I wasn't trading that. And you just got this thing, right? My trade was not in the ES. I have to acknowledge that for disclosure. My trade was here in the Nasdaq, because this market was, leading the way. It could have been anywhere. It could have been the ES as well. But I am trying another market. So it's the first time I do the down, for example. I just want to test how it feels to do just one lot there. And as soon as the market makes this high, takes this high out, takes the previous all-time high out, the Nasdaq is doing the same thing, but it fails to close the gap. It fails to close the gap. At the time, we have a formation here that look like this as well. The histograms. Now, what I'm trying to say, I did multiple trades today. Constantly being stopped out for a loss. I lost, a lot today, a lot of times today. If you have watched Mark Douglas' video, the one I suggested early in the morning, I am reading, I was listening to this book, Tom Hogarth's book, The Best Loser Wins. The trade that I am doing now, right now, at this moment, as 1:35 p.m., has nothing to do, right? Has nothing to do with the trade that I did 5 minutes ago, or 60 minutes ago, or 3 hours ago. I may have lost multiple times. I may have won multiple times. The fact that I won or lost it doesn't mean that I am going to win now, or that I am going to lose now. That's are odds. Each time I use my edge, I have 65% chances. That's it. Right? There is another book that I recommend you. This is Thinking Bets by Annie Duke. Now she says, I don't know if I read it there, but what she says is, and Mark Douglas said that in the video that I recommended is, she said that the edge the casinos have is really small, right? They have only like 10% or 12% chances higher than us to make money. Same goes in the market for us. We have 60% chances. Our odds, a good edge has that is like that, by 65%. Yeah? But how come the house always wins? And the reason is very simple, actually. The reason is that the house is the only player that plays all the games. And if we move that to trade, if I have my strategy, if I have a signal, if I have a setup that I need to see to go short or to go long or to reverse or to whatever, I have to use it. Because I don't know if it's going to work. I may be a loser, I may be a winner. Who cares? The thing that matters is that I have to be there. Because I don't know what the result of that trade is going to be. But if I wanna use the potential, the full, the 100% potential that I have, and that 65%, I have to do all of them. And that's the reasoning also behind the exercise that Paul David gives, right? That I mentioned before. Is do 20, 30 trades, right? Using your strategy. Yeah. But whatever your strategy is, use it. Set the rules. Set the rules how your entries are going to be. Set the rules where your stops are going to be, and use it. Get accustomed to do that. And this trade, boy, has took so long to develop, right? But once it is, I don't even take it up here. For example, it was kind of like around here. But you can see that, once or because you were observing, because I was observing the market, I could take the trade. If this happened after 2 minutes, I was doing something else. I come back and see, probably I wouldn't be able to take it. That's why I have to be present in the market at all times. And I had a mindset today, remember what I said in the morning, I wasn't going to trade because I feel tired. But I have the right. I'm not ashamed to change my mind. If I see if it works, it works. If I see it doesn't work, it doesn't work. We have to be able to let it go. That's very important. I once mentioned when I was with Jimmy in one of his intensives that it was mentioned that we have to build this mindset that's called the quarterback mentality, right? The quarterback mindset, because quarterbacks make mistakes all the time. Really, really bad mistakes sometimes that can hurt their teams really bad. But they just have to forget about that mistake and move on to the next play and do all over again without the baggage that the result that without the baggage of the previous play. The execution was bad, something happened, we are 7 points down now, or we are just 1 point. Our advantage is only 1 point now, or we are tied, or whatever, right? Just move on. This trade took 9, 10, like 4 hours. 4 hours. Sitting here, watching the market. Something else that I also wanted to do or to tell you, I have no association with Jim Dalton or with Tom Hoover, but trading is a lonely business. It's a lonely business. If you are a person that is very outgoing, that likes to be surrounded by people, that likes to be talking all day long, this is going to be really hard for you, right? Because we spend lots of time here in front of the screen doing homework, reading markets, reading whatever, doing a lot of job here. And I found I found this guy. He doesn't trade in the way I do. But this is really, really interesting. I was listening to him today in his Telegram channel, which, by the way, is free. He doesn't charge anything. You can. The only thing you have to do is send him, send him a text message, and what he says personally, respond to you and send you the rules. He sent me the rules of his trading rooms, of his trading room, because he has two, right? One about forex, the other one live day trading, and another one also about of resources. And he doesn't charge anything. And it is really, really refreshing, or at least it was for me refreshing to hear, just to be here and listen to somebody else that is doing the same thing as I do. Right? He has his point of view. He trades candlestick charts. He's very successful, and I found this thing. Maybe you know him. As I say, I don't have any association with him, but I find it really interesting. I have shared some of his YouTube videos before. I didn't know he has a trading room as well, because most of the traders out there will charge you. I will charge you for signals, for alerts, or whatever. He doesn't do that. He doesn't have a YouTube channel. This is voice over voice, so there is no latency. Because in YouTube, for example, right now I do have 1:44 p.m. 45 seconds. You will hear this message in about 20-25 seconds, and sometimes there's a lot of difference. That makes a lot in markets, and it was funny. I had really good times listening to him today. It was really funny. Well, I guess that's it. I don't have much to say. Today or tomorrow we have CPI. It's going to be an interesting announcement. CPI is at 8:30 a.m. tomorrow. We have a market that is, we have a market that has no excess to the highs. We have a market that's very elongated in the lower side, and it's right there at the center, right? Good also market can take this high, but also it can have a big break as well. Considering that there is a lot of long inventory that has to be, there's a lot of loans that still have to take profits. How is that going to happen? It is ever going to happen? I don't know. Right? But that's what we have tomorrow. We have CPI, and Friday we have banks reporting yearly before the open. Also, we have PPI on Friday. PPI is 8:30 a.m. Now, for the rest of the day, I guess I'm going to be watching the Nasdaq here. If the Nasdaq can close this gap here. I guess that market is obsessed in closing this gap. Which, if this happens, okay, probably we are going to have some upside extension here, and the ES is going to be in this area, okay, where good selling can show up here. There's a good reason for sellers to selling to appear here, and if that doesn't happen, we can have really good upside movement. When that's going to happen, it is going to happen or not, that I don't know. All right, but I am now my focus has switched to this area here. In the morning, I had something up here, I don't remember what, but I have a level like this that was monitoring. This low has not been corrected, neither this one, neither this one. So the lower side of the current market is questionable. This is the area, the go no go area, which is the low of this distribution. The market was bought right from the center of this single prints. Sellers were just not interested here. There were no sellers. There's little excess here. Technically, there is excess, but it's insignificant. This day was bought from POC. Now, something else. Let's check. Let's check the overnight sessions. Here, there was a lot of inventory that wasn't in hands of the overnight traders. Let's see where this high has been bought. What is this? Come on, man, look at this. This is not coincidence, right? You got this distribution and market is selling right from that level. This is super, this high is questionable. And what we have there, we have a prominent POC and a very prominent POC as well. Overnight POCs, which are weak hand traders. Non-excess on the all-time highs and high market high made in the overnight. It is rare that the market leaves this kind of highs. Usually, market has a tendency to come back and repair those ones, make new highs, but during regular trading hours. All right. I don't have nothing else. I think the day is over for me. If you have any question, please just let me know. I haven't posted anything on Twitter since the end of last year. I didn't have the chance. I didn't have time to do it because I was very active in the morning. I just have enough time to be doing these streams, and sometimes also during the stream you can miss some opportunities because you're not 100% focused, right? But focus is key in this business, right? Just like this, just as Alex Honnold, right? We have to be, what the heck is this? We have to be super focused in what we are doing. Super hyper focused, and we have to have tons of preparation just to have a chance. All right. Once again, I wish you guys a wonderful rest of the day. Wish you the best. Stay safe and good luck. Bye-bye. Oh, before I go, something else. I get distracted here. Once this, the thing is, once you have this trade on, the next thing is monitor. I am always monitoring the market. What can happen? Where I'm going to have, where I'm going to take profits? Should I take now? Should I let it run? Right? And the way how this market is developing has been reacting or trading today. There are lots of short-term traders is high. okay? Because this low here, because the market coming back here, buying from, you know, as close as possible to low, selling as close as possible to high, you know, buying from this exact level. So the odds are or were that this is very, very short-term trading, pure, mostly short-term trading. And when I got this reaction, this liquidation of this inventory that has just get long, these longs probably, the odds that these longs are short-term trading, just weak short-term inventory, just weak short-term trading traders holding the long inventory was high, right? And remember what we talked in the morning about other traders also, and other participants that also are short-term but have more power, have the power to move markets, right? They realize what is going on and they just sell into that inventory. Once that inventory is being liquidated, who wants to be who wants to be short in front of the big news like the one that is coming tomorrow, right? So that the odds that what's going to happen was the odds that what was happening was just long liquidation was high. The odds that it was a serious selling that can move the market all the way to the opposite side of the range were not as good. Yeah, that was possible, yes, but I have to monitor what has to happen. Right? For instance, the market has to take this low. Right? It did take the previous period low out, but no more. It just stalled there. Right? It just stalled there. And also it happened really, really fast. And those things we have to practice over and over, right? There will be times that we're going to miss the trade. There are going to be times that we're going to close too soon. There are going to be times that we're going to have a good profit, and because we wait, we are going to close break even, and sometimes even for a loss, and sometimes for a big loss. We just have to keep practicing. Practice and practice and practice and practice until we master that. We get to know ourselves. How do we react? How do we see the market? Okay, that was it. All right, I hope it helps. I truly hope it helps. All right, see you guys. Have a wonderful rest of the day. Bye bye.